In this video, you're going to learn what a DSCR loan is and how you should use it. So DSCR stands for Debt Service Coverage Ratio, and debt service is basically the cash that it would take to cover your debt payments in a specified time frame. So if you're an individual and you've got a mortgage that's $1,000 and a car note that's $500, and let's just say that's all of your debt, then you would need $1,500 to service your debt every single month. And from what I was able to find, it's available in all 50 states, but not all banks offer this type of loan. And you use it to purchase income producing properties. And these can be a single family property, but they've got to be producing income. So like a rental property or an Airbnb. And then you've got duplexes, triplexes, quadruplexes, apartments, mobile home parks, etc. So long as the property is producing income. This loan type does require a down payment, and basically what I found is that typically that's going to be a 20% down payment, and it could be more based on your credit history and your experience with investment property. I saw one lender who would go down to a 575 FICO score on this loan, but would require more of a down payment than 20%. Investors use these loans and they like them because the loan approval is based more on the property than the individual who is applying for the loan. There is no income documentation because, again, this loan is based on the property's ability to cover its own debt payments. Now let's calculate a debt service coverage ratio. A good DSCR is going to be 2 or higher. That means that that property is generating enough cash to cover the debt twice every month. As a reminder, ratio means you're about to start dividing something. Here's the formula for DSCR. The net operating income divided by the debt service. Okay, so when we're calculating this debt service coverage ratio, we also have to know what our net operating income is, or NOI. And so some of you guys may be experiencing this, but some of you guys might be doing this for the first time. So what we're going to do is pretend like we're just calculating our own household's debt service coverage ratio. And your net operating income is what you bring home every single month. And your debt service is what you got to pay out. Okay, so in our example, we're going to pretend like you've got $5,000 in take-home income and $1,500 in monthly debt payments. That means that your DSCR is 3.33. You've got over 3 times the amount of cash coming in that you need in order to cover your debt payment. And if you were an investment property, then the lender would be happy to give you a DSCR loan. But remember, you're still going to need a down payment. Now, as an investor, when you look at a property, you need to know what that property's operating expenses are. The property taxes, the insurance, maintenance, repairs, utilities, property management. So in this example, we're going to pretend like the property has $2,500 in total operating expenses. Buyers are liars and sellers are too. So when you're looking at an investment property, always remember that. When you look at their numbers and what they say that property's expenses are, you always want to make sure you verify them. So let's say this property is bringing in $5,000 in monthly rental income, and its operating expenses we verified are $2,500 every single month. That means this property's NOI, or net operating income, is $2,500 a month. Now let's say that there is $1,500 in debt service that property needs to pay every month. We're using that same $1,500 that we use in our own individual example. And remember what debt service is. It's the amount of cash that you need to cover your monthly debt payments. So we're just going to keep that $1,500 amount for our example. Okay, we've calculated the property's net operating income. It's $2,500. And we are using that $1,500 to represent that property's debt service, its mortgage and whatever else. We divide, and then we get the debt service coverage ratio on that property is 1.67. And remember, 2 or greater is really great, but the closer to 2 that you can get on a DSCR, the better. Okay, let's have some fun with this. Calculate your household's DSCR and drop it in the comments. I'll see you on the next video. Peace.